Hello friends and partners, this is Pankaj Tibrewal from Kotak Mutual Fund. Today I am going to talk to you all about the Kotak Balance Fund. Kotak Balance Fund is a true to label balance fund with maximum exposure of 70% to equities and the remaining 30-35% to fixed income securities. On the equity positioning today, we are following a multi-pronged strategy of large caps, mid caps and small caps. As we speak today, the equity positioning is more overweight on consumer discretionary, financial savings and industrials as a theme. We believe that in the near term, 7th pay commission, which is going to hit the bank accounts of 1 crore people, government employees in the next few days, will help accelerate the consumer discretionary demand, especially on autos, consumer good, white goods, etc. On the financial savings, we are of the view that there is a shift taking place between physical savings to financial savings, and hence we are very positive on private sector oriented banks and NBFCs. On the industrial side, we believe that there is a very strong recovery happening on the public capex, mainly led by roads, railways, defense, ports, etc. Though we acknowledge that the private sector capex will remain anemic for the next couple of years, but we are very excited about the recovery on the public sector, and hence we believe anything which has to lead or linked with the production cycle will do extremely well, and hence we are overweight on industrials like the early cycle plays of bearings, pumps, etc. On the underweight, we believe that IT sector will continue to face challenges, and hence we are underweight on that sector. We continue to have underweight stance on metals because we believe fundamentally there is nothing changed on the demand side equation in that sector. On the fixed income side, we follow a dynamic approach of duration or accrual depending on the markets. As we speak today, we are high on duration and we have rode the interest rate cycle quite brilliantly in this last 6 months. We believe the Kotak Balance Fund is suited for investors who want less volatility than a pure diversified equity fund but are chasing higher returns than a pure debt fund. Hence, it's suited for investors which are likely to have lower risk appetite to absorb than a pure diversified equity fund. This fund has been consistently paying dividends over the last couple of years, and hence we believe that it also is suited for investors which are looking for regular payouts. So, in sum, Kotak Balance Fund is a 70 maximum equity percentage portfolio. It's a true to label balance fund and suited for investors which want less volatility than a pure equity diversified fund. Thank you all.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.